Hello everyone, this is Michelle Schneider-Mish of MarketGauge.com, and for today's video, February 28th, last day of the month, we're going to cover the dollar, the euro. We'll talk a little bit about some of the commodities, particular silver, follow through on natural gas, and some of the other more industrial metals that I'm watching very closely right now. So let's begin here with a picture, and this is going to be a little bit different than what you've seen before. I've shown you our charts through stock charts, and I'll go back to that. But what I want to show you right now is just the continuous contract here in the US dollar. So what's so interesting is that, and you'll see when we talk about the euro in a bit, the phase here, and what I mean by phase is the position of the price and the position of the 200 and the 50-day moving average are still really in what we call a recuperation phase. So you have the 50-day moving average had a death cross here in early January, and the 200-day moving average is serving now as major resistance, and the price immediately dropped below that 50-day moving average, and then here we got a little bit oversold in February. Right after Valentine's Day, we started to go back up. But that's just the daily perspective. What's really interesting is how when you step back, you can see different types of scenarios. Like, for example, if we go to the weekly chart, yes, we did have a nice short covering rally. And of course, with other problems still looming around in the world, particularly interest rate hikes and inflation, the dollar has indeed outperformed recently, but it's still running into a lot of resistance here. We're going to use the same moving averages. In this case, it's the 50-week moving average. Now, we are in a different phase here because you can see in this case, we had a golden cross where the 50-week crossed over the 200-week. So this puts us in a completely different type of phase. So now let's look at the monthly chart. You know that I've been very keen on the 23-month moving average and really being able to determine what type of business cycle we have. So again, with a strong move up in 2021 and 2022, and with it starting to fail as we got into the end of 2022 and so far here in 2023, we are still holding this 23-month or 2-year business cycle. So that means that on the short-term basis, the dollar is still struggling, obviously not clearing this, but on a longer term basis, it's still reigning supreme. This chart here is just basically our pivot chart. We're not really necessarily going to pay much attention to that. But this is important to keep in mind as we go now and look at some of the other charts. So now this is the traditional chart that you have been seeing me give you every week, and also when I was writing more. These are the charts from stock charts that include our ACP plugins, both the leadership plugin, which is how it does against a benchmark. In this case, you'll see I changed the benchmark, and our real motion indicator on how it does basically in momentum. So now this is the euro, right? This is the euro trust. So I'm going to show it to you through ETFs because basically most of our clients are used to trading not necessarily FX futures, but actually the ETFs. And they're not a bad way to go, obviously, if you want to feel a little bit safer and a little less volatile. So in the case of this, right now, you can see that we did have a golden cross here, but we're underneath the 50, which puts us more in a cautious phase. We call that a caution phase or a warning phase. And so it kind of corresponds with that rally that we saw in the dollar. Now, it started out popping today on the news of Brexit and this Windsor framework that basically your PM is trying to establish better ties within the EU, particularly with Ireland, praised obviously by President Biden here in the US, but that the EU is still dealing with record food inflation and still has issues from the repercussions of the Russia-Ukraine as that's continuing. And of course, I also read that COVID is still much of a concern in England and throughout Europe than it is anywhere else, which I did not know. So that's also still pressing on the economy. So the euro and how it performs against the UUP is going to be important, not just obviously obviously for the economy for England and the rest of the European Union, but also how it relates to the U.S. economy. So if we look right here, we can say right now that this looks like it's struggling. And if we use UUP just to basically do oranges and oranges, that's the ETF for the US dollar, you can see the euro is strongly underperforming. However, when you start to cross over the Bollinger Band on the bottom here, then that could mean that that will change. We don't know that yet. We aren't going to say that for sure. What is interesting is that we did have a golden cross in momentum where the 50-day crossed over the 200-day. And we were trading very well up to the Bollinger Band resistance, holding the 50-day moving average for a bit. And now, of course, you can see that that momentum has declined. So overall, right now, even the news giving it a bit of a pop, in terms of its relationship to the dollar right now, it still has a lot to prove that it can possibly catch up at this point and overtake the dominance of the US dollar. We're going to talk about the dollar and the Japanese yen next. So keeping consistent with the ETF, this is a look at the Japanese yen trust. And we know that Japan has had a host of issues with inflation, with trying to support its own economy with lots of buybacks of bonds, banks buying stocks, low labor force because of an aging population that they're trying to take care of. And so right now, it's no surprise that we're seeing this being weaker than the euro and also the US dollar. What is interesting is that we had this big peak off the highs here. And again, some of these Bollinger Bands that you see when I show these charts are interesting because when they break out above, if they don't get follow through and break down below, often that's a really good sell signal along with the classic type of brick wall top that we talk about a lot in our daily that we put out every day. So right now you can see the little bounce here off of the Bollinger Band. We eventually broke down underneath the 50-day moving average. We are now in what is called a distribution phase because the 50 is above the 200, but the price is just below. And so we'll see if that gets any kind of follow through or whether or not we're actually going to be hitting some kind of bottom. Clearly, you can see this is well underperforming the UUP. We'll take a look at it against the euro in a moment. And if we just look at the momentum, this had also a bullish cross. We've broken down under the 50. Now we're struggling here at the actual zero line. And if this actually never gets down to the Bollinger Band and starts to clear back up and we start to get more momentum, as we're also getting back over these recent highs here, which would be at 68.53, then I believe that we might have a shot at least of trying to get back and fill this gap. So in the currencies, yes, the dollar is still the strongest one. Now let's move to switching the leadership from a UUP to an FXE. And we go back and take a look, you can see that it's actually even worse against the euro than it is even of the dollar. So if we're going to look to be trading anything in the currencies right now, as I said, I would be looking at, first of all, the possibility of the Japanese yen, if it can actually clear, let's say, over this high, which is 68.53. And if we're going back to the euro, oh, here we go, actually showing two different frames. This means that it's comparing itself to itself. That's why it looks like that. And in comparing this to the actual euro, if we were going to be looking at any kind of trade at this point, I would want to see not only the momentum get back over the 50, but I also want to see the price get back over the 50-day moving average. The last note about the dollar, going back to my TradeStation charts, is that I would think if this breaks down under 104, then we may take another visit to retest this 23-month moving average, in which case I would probably say that the euro would start to do better along with the yen. So at this point, crossroads. Now let's take a look at the SPY chart. Now, in terms of the U.S. economy, we've had so many mixed signals right here. We've had weaker economic stats with ISM. We had trade deficit not doing so great. We had consumer confidence falling. We have U.S. debt rising. And yet, We continue to have a trading range, and that's exactly what we're seeing here. Hasn't changed that picture at all. The thing is, what's so interesting is that so far this week, we are having an inside week to last week, which means right now, and of course makes total sense, that traders are really paused. They don't really know at this point whether or not this is going to go down or up. I could say from a long-term perspective, just like I showed you, the opposite was true in the dollar. Here we have a 23-month moving average that served as great resistance. So we're certainly not showing any kind of big signs of a U.S. recovery at this point. That doesn't necessarily mean, though, we're going into some major recession. And what is also so interesting is in this trading range, and we can tighten it up. We can say 405, 390, even 393, because the low last week when we dropped was 393.64. We're right back over that 50-day moving average. This is putting it in a bullish phase. So what's so amazing right now is with all of the punches on the chin that the SPY has taken, it's hanging in there. Bullish or bearish? This is what we don't really know. All we know right now is the phase on the daily is bullish, but we went back into a caution because we're under the 50-week. So where we close this week, I think is going to be super important. And if we can get a close back over 400, then I think the next move would have to be up. Logic, who cares? You got to follow the price. So that's kind of where we're at with the SPY right now. Okay, so let's switch our focus now to natural gas. I actually had talked to you last week and said that natural gas looked like it was bottoming because it had a very classic huge move lower, reversal in terms of what we call a glass bottom, because it made a new low after gapping on very good volume, higher than normal volume, as you can see down here, and then closed above the prior day's high the next day, getting some follow through. However, we are still very much into the resistance zone. So this was a great active trade to be buying, let's say, at around 740 on this day. And then really basically taking your profit close to 9, which you can see we got up to 904 on Monday, and now we're coming off again. What I would do here is I would think that 8, even though we have a 10-day moving average here a bit higher, I would think that 8 would be my bottom line right now. And if we can hold 8, then it's possible that we can see another move up, or this could have just been the short covering rally that worked off extreme oversold conditions. We still are pretty low in terms of our oversold conditions because this is a monthly relative strength indicator at 4. That's pretty oversold. Now, speaking of monthly, I mean, this is how really well these monthly moving averages work, because this 23-month has been under the 80-month, and the only time we cleared both was obviously during this whole situation on the heels of the Ukraine-Russia war. But you can see that this is reflecting the increase in storage of natural gas. And of course, I like this Bollinger Band right here. We haven't quite gotten to it, but we got pretty darn close. So at this point, you got the breadth of the move up, but I would say that at this point, I would also really want to see it hold 8 before I would do anything else, or on the flip side, possibly clear 9. So if we look at the real motion indicator, I have it on this chart as well. And I like looking at these charts because I like looking at all 4 time frames at once. But here is obviously been in a terrible momentum. We got actual here, we got a little bit of a mean reversion, but really we haven't really done anything great yet. So if you wanted to say, well, where besides an active trade would be the best time to invest in natural gas, it would be if this can get back over its 50-day moving average in momentum, and do it with some gusto. And I would imagine we don't have to wait for all the way up here. I would imagine it might have something to do with it clearing over 9. Now, just to take a look at the other chart that we like to look at, the white chart, just for a little bit of comparison here. What's so interesting is that natural gas actually took some leadership against the SPY. And on this momentum indicator, you can see it's also still under the 50. Doesn't look like it's quite as far under the 50 as the other chart that I showed you. And so I would take this one with a little bit more credibility. So there we are with natural gas. What I'm also finding really interesting here, by the way, since we're speaking of energy, is the U.S. oil fund. I mentioned this, I've written about it. This right now is outperforming the SPY. It is clearing the 50-day moving average in momentum. It just needs a couple of closes here over the 50-day moving average, so we're calling it about 68. Now, since we're on the topic of commodities, let's talk about gold just for one quick second, because I have mentioned to you over and over and over again that I really like the gold market if it holds above 165 or anywhere between 167 and 170. And clearly you can see by today's action, it's starting to overtake the SPY a little bit. That's really interesting. Momentum hasn't necessarily done very much, but we'd like to see it get back over the 50. And of course, if we take a look at this, and I think we really need to on a weekly basis, we never broke down under that 50-week moving average. And if we go to the other charts that I'm showing you right here, where I can get a very quick view of the 23-month moving average, the reason why I have been keen again on gold is because of the fact that it's been holding this 23-month moving average. Today's the end of the month, so we may have a bit of a bearish engulfing pattern, but I love the fact that you have such a tight risk here that if it actually starts to move back up on that momentum indicator, then I would say that really basically if it breaks down under 167, that would be probably a place to get out. Or if you wanted to go a little bit higher, you would say under 168. And of course, if we look at the daily chart, you can say under the 200 or under 165.40. So that's my outlook in gold. And in silver, we think silver might have bottomed out here. We have a feeling about silver that, and gold, by the way, is when it really starts to look god-awful and all the bears come out and say, you see, you see, you see. That's generally when silver and gold have been a really good buy. I mean, here's a classic example. People were like, that's it, silver's really going to crash. And of course, it turned out that it turned around that day, never took out this low and made this huge move higher. So at this point now, I would want to see the lows of this week hold, which is 1889, maybe a little bit of fudge here. Obviously, here's your 80-month moving average. Unlike gold, silver is underneath the 23-month and underneath the 200-day, which means I don't even need to look at a ratio chart, but we will anyway, to show you that if we change this to a silver chart, and we change the leadership to gold as our benchmark, I mean, you could see right here that this is why people think recession more than inflation at this point. I still say stagflation, because look at how poorly silver is doing in relationship to gold. So that would be something else to keep an eye on as well. If silver starts to take any kind of leadership to gold, and we certainly don't have to worry about that like today, then that too could be a really very interesting opportunity. Now that was actually the weekly chart I just showed you, so here's a moment to take a look at the daily chart. And on the daily chart, I would also be looking for some kind of mean reversion, which means a movement over the Bollinger Band, which would correspond with the zero line, and most likely get real close to corresponding here with the 200-day moving average. And of course, you can see even on the daily, it's still severely underperforming the gold. So I'm going to leave you with one more chart, because I have been very interested in the industrial metals, which while we've had a sideways action in the overall indices in the U.S. and we've had some struggles with the precious metals, the oil going sideways. One thing that has really been perking up here is some of the industrial metals, and I featured in my Mish's Daily, which you can get on our marketgauge.com website, Century aluminum, or as you guys across the pond say, aluminium. And so right now it's having a pretty interesting breakout, clearing all of this resistance here over 1140 to 1160. And if that maintains, then I think we can be taking a look here at the possibility of a run up to at least 13, 14, maybe even 15 or 16. Let's go now and actually put back in our right leadership, which would be SPY. And so here it is showing great leadership against the SPY. Momentum indicators are strong. We're not quite up to the Bollinger Band yet. What you really want to see is a clearance like we did back here of the Bollinger Band, and then you have a nice little move. You know, with all commodities, you have to realize they're extremely volatile, and unless you're getting into something like sugar, where we were able to get in closer to 5 cents a pound, and now it's trading closer to 19 or 20 cents a pound, and held it for 2 years, I'm looking at all these trades, whether it be in industrial metals or precious metals or in energy markets, more actively, in that you have your risk parameters set, you have your profit targets set, you keep a tail if the trend continues your way, but you think very nimbly and watch the US dollar. Thanks so much, and bye for now.